have with us Rohitash Gupta, the CFO, joining in now on the show. Mr. Gupta, thank you for joining in. I think it's been a good performance by Eclerx, because I also see sharp margin expansion, which is something that has boosted the profitability of the company. But I think let's start off first with the top line, because the revenue contribution from the top 5 accounts saw a decline, and growth essentially came from the top 6 to 10 accounts. So what's essentially the commentary coming in from your top clients and top accounts?
Yeah, so if you look at our overall revenue for the quarter, we did 51.2 million, which is roughly 2% up quarter on quarter on constant currency basis. However, if you look at the full year, it was a very soft year for us because we grew hardly 1.5% on constant currency basis year over year. Coming to margins, margin also, while there is a expansion from quarter on quarter perspective, but on year basis, there is a significant decline. We think that, Q4 margins are quite representative because they are very close to the FY19 overall margins of about 18.5%. Coming to the top 5 as well as, other clients, we are seeing quite softness in terms of, overall top 10 client base. And while clients move across the buckets, right, 5th becoming, moving to 7th or 8th number, it can create some movement across the top 5 and 6 to 10 bucket. But overall in top 10, we are seeing quite a bit of softness since last few years, where revenues have been largely flat.
Gupta, like you mentioned, also your margins actually recovered in Q4 after a sharp drop in Q3. That's led by higher utilization and lower employee costs also helped it. But what headwinds do you see from wage hikes as well as visa costs in Q1?
So the good thing is we are not impacted by the visa thing, but on the wage hikes, we have typically seen about 200 to 250 bips of downfall every Q1 when we, make the new wages go live, and similar trend is expected even this year. Having said that, some of that will get cushioned by lower expected G&A and depreciation in the Q1. But having said that, we expect operating margin percentage to decline in Q1 because of wages.
Mr. Gupta, you spoke about the traction from your top accounts, but if I have to particularly dissect it vertical-wise, especially BFSI, where many peers are seeing a slowdown. So how is traction looking across some of these key areas?
So we operate in capital markets vertical within the BFSI, and there also you rightly said that commentary has been quite bleak from the industry players. And having said that, we are seeing a very, very good momentum on the regulatory side of capital markets business that we are in. We see some bit of softness in the processing or back office, middle office work in the capital market. So it's a mixed bag within capital markets for us, with the half piece growing, very, very sharply, whereas other half piece remaining quite stagnant.
Gupta, let's talk about your digital space and how much does digital make up of your overall business, and what's the growth momentum seen here for the next 12 months?
So digital, is a significant part of the business. It remains the top vertical by revenue share within Eclerx even today. And the growth typically comes from, hybrid projects that we have been executing in the analytics as well as digital UX UI space. And we see continued momentum. The only, drag there is that many of these projects turn out to be, short term, 6 months, 9 months. So you have to keep refilling the pipeline. But if you exclude that factor, I think the growth has been quite satisfactory in the digital part.
Okay, all right. And Mr. Gupta, if you could just tell us how are the TCV deal wins, what is the pipeline like looking over there, and what sort of inflows, order inflows are you penciling in the coming months?
So one unique thing about our business has been that because our business has been very concentrated across top 10 clients, most of the new work that comes also comes in those clients. And many of those new deals are actually smaller expansion or incremental type of deals where clients don't have to give too much notice period, which means that our pipeline is always very small proportion of next 2 quarters revenue. Having said that, the pipeline is a good indicator of the momentum, and I think where we stand today in terms of pipeline size is much higher than where we were 2 years ago at the same time in March, April. The mix of that pipeline is, again, half onshore and half offshore, which means that, onshore is likely to still grow at a faster pace than the offshore business.
All right. Thank you then, Mr. Gupta, for joining in and giving us a sense of what exactly did transpire for Eclerx in the fourth quarter.